how are we going to start?
Hey, good morning, Chris. Yeah, markets closed on Thursday night, all day Friday, and then they reopened Sunday night again because of the Easter holiday. So we have that big stocks and acreage report coming out Thursday morning. Well, we will be able to trade it because it's at 11 o'clock. Markets close at their normal time on Thursday. So we'll be looking at at that as probably the main thing for the week. Here in the overnight trends, we're mostly higher. We're follow through buying, and especially in the wheat. That's the upside leader. And of course, we're looking at what's happening down south in South America. And the weather really looks pretty decent. There's spots and patches where it's been too dry, and that's helped us rally sometimes during this year. Here recently, we saw it in corn, and soybeans eventually rallied as well. And the wheat market is the one that has not had much fun short covering. This kind of started on last week, couple days of some buy interest, and we saw a little bit more overnight. So hopefully we can see another day or two of that fun buying in the wheat market, and get us some short covering, get us a little bit of a bounce like we saw in corn. But to really push to the next leg higher, you need some help from weather here in the U.S., South America, or even in this report to show us some sort of a bullish type environment that we need to need to start trading.
Right, and I've noticed in the acreage report, we know we're going to get a little bit of one crop's going to get a little more than the other, but seemingly like the numbers are still going to be right at total number of acres equal to last year. Is that right?
Yeah, it could be down just a little bit from last year, but for the most part, we're going to see just the same amount of acres just reallocated. And the trade is expecting to see much more soybean acres, much less corn acres than a year ago, and a little bit more wheat. And I would say, from driving down in this part of the country, in Oklahoma and Kansas, Missouri, it seems to be more wheat fields in this area than what there were a year ago. I talked to clients in Texas. There's less wheat fields there. They're planting maybe more corn, maybe a little bit more cotton because of prices. But so it kind of goes by geographic region. Who's going to plant more acres, less acres, that sort of thing. The trade is, as I said, expecting more soybeans, less corn. The USDA at their outlook forum last month said the same thing. They expect a big swing, a lot more soybean acres, and quite a bit less corn. And that has at least people hoping anyway that the corn market could find some support and even rally further because of planted acreage cuts.
Absolutely. Well, I know we got a cattle on feed report that came out Friday. I'm anxious to discuss that with you. Stick around. We're going to take a real quick commercial break and come back and talk to Brian Hoofs about the cattle on feed numbers. Stay with us. Risk is inherent in commodity production. It can't be eliminated, but can be managed. With over 30 years of experience, Swift Trading Company has the knowledge and provides the service to meet producers' needs. For more information, visit swifttradingco.com. All righty, welcome back. Let's see where we're going to start at this morning. These were Friday's closes. A little bit softer pretty much across the board, with the April down 87 at 187.50. The June contract down $1.60 at 182.90. All the way out to that December contract at 188.47, down $1.67. Our feeder market was really soft last week. I'm anxious to see how it's going to trade this morning. The feeder cattle index on Friday closed at 251.38. The March contract closed at 249.95, down 92. Last trading day will be this Thursday. April, 251.50, down 312, right in line with that feeder cattle index. And May down 430 at 253.77, trying to catch the feeder cattle index. And let's see what lean hogs are doing. They were down 32 on Friday, 84.57. The May contract was up 50 at 90.40, and June up 40 at 99.70. Get Brian Hoofs back in here again. Let's talk a little bit about this cattle on feed number. Brian, I know it was a surprise to some people. It really didn't surprise me. If it did, it kind of did it in another way, that we actually didn't place more cattle than what I thought we did.
We placed a lot of cattle last month, that's for sure. Well above trade estimates, well above year-ago levels, and that's really what's attracting most of the talk this morning and after the report came out, quite frankly, is those big placement numbers. So it doesn't necessarily mean that we have more cattle on feed. It just tells us what the timing of those cattle, right? They're now in the feedlots being fed out. We can kind of determine when that is going to hit the market. So we're going to see a lot of marketings in that August, October timeframe, and we're going to see, what we've been talking about this year. It's some problems developing in this cattle market. I think everybody wants to be extremely bullish and see a repeat of last year, but here's what we know. We do have more cattle on feed than a year ago. We have more cattle being placed than a year ago. We're going to have more supplies this year, but yet we're killing less cattle. We're killing heavier cattle than a year ago. 22 pounds heavier carcass weight as of last week. As of last week's slaughter pace, we're 400,000 behind a year ago level. So it's a bad combination right now when you have more supplies, heavier supplies, and you're killing less. All you need is some sort of a real softening demand trigger, and we could see, a lot of weakness here in this cattle market going forward. We've been recommending to get some hedges in place all the way out through this year, and still stand by that recommendation that you have to have some sort of a marketing strategy here rather than just anticipating this market's going to take care of you.
Right, we've listened to the Fed talk about a soft landing. We're going to come on a soft landing. Is it possible that this liquidation phase goes into a soft landing instead of a really hard landing, and then all of a sudden we expand and deteriorate all of our breeding stock right offhand and take it out of the slaughter pace and just make us void of beef altogether?
Well, anything's possible. I don't know that that's going to happen, but maybe it will. We've had good winter for grazing. We've had a lot of moisture so far that has allowed those cattle to stay on wheat and oat and grassland for the most part. Now they're starting to come into the feedlots. So a lot of that is going to be dependent upon what happens in the spring and the summer. If we're able to retain some animals and keep them out on those grass pastures, feed them out, and then see, if we can rebuild that herd that we have not been able to so far.
Right, and I know the volume of both stocker and feeder cattle has been enormous. Our sale barns have really projected a tremendous amount of volume that they have sold through there. And that's where I kind of came up with, I thought we would have a few more cattle on feed, but that still kind of tells me that when I look at that volume and being large percentages over last year and the year before that, when we did have a lot of cattle out there, it kind of lets you know there's still plenty of cattle out there. So